All right, so what's up, guys? Today we are going to be talking about order flow shifts. I'm sure you guys have heard the terms thrown around: change in state of delivery, market structure shift, ST, etc., etc. The truth is, they're all really just different ways of viewing the same thing, and that is order flow shifting. Order flow is the foundation of everything that I do, and having a proper understanding of order flow is crucial to becoming a profitable trader. Now, there are three popular ways of viewing order flow shifts in price: market structure shifts, change in state of delivery, and Ario's ST. Now, I want to make this very, very clear. All of these ways of viewing order flow shifts must occur at a higher time frame PD array. So let's talk about market structure shifts. Market structure shifts are simply a change in trend. Basically, we are just focusing on the swing point where the change in trend happens. We want to see price displaced through that swing point, aka create a fair value gap through that swing point, shifting the trend. Next is a change in the state of delivery. Like I said, every single way of viewing order flow shifts must occur at a higher time frame PD array. So a change in state of delivery is simply an order block that gets created at a higher time frame PD array. With CISD, aka change in state of delivery, we are focusing on the opening price of a series of up close candles. So for a bearish order block, it's a series of up close candles or a single up close candle, and we're focusing on price creating a bodily close through the opening price. Once price has created this body close below the opening price, that is what validates this as a change in the state of delivery, aka an order block. The opening price then becomes fair value, and price should respect it. High probability changes in state of delivery will sweep liquidity first and then create displacement, aka a fair value gap, while they change state of delivery. Next, we have an ST, which is a sharp turn. An ST is simply a fair value gap in and a fair value gap out of a higher time frame PD array. ST is simply just a CISD that creates a fair value gap. So it's waiting for price to create a fair value gap, meaning it's a high probability change in state of delivery. The point I'm trying to make here is they are all just different ways of viewing order flow shift, and they do the exact same thing. So as a trader, as someone that is trying to be profitable trading, you need to simplify your trading and just use the one that sticks out to you. So of these three, market structure shift, change in state of delivery, ST, which one stands out to you? Which one is the easiest for you to see? Which is the one that feels the highest probability based on your data? That is what you need to ask yourself. That is how you need to approach this. Don't just use something because somebody else is using it. Let your data tell you. Let your personality and the way that you view price dictate what you do. So if one of them stands out, if market structure shifts stand out to you more and are easier for you to use, then just use those. If Ario's ST sticks out to you and it's way easier for you to use, then just use those. The point is, all of them work. All of them are great ways of viewing order flow shifts, and you need to just pick the one that resonates with you. So now that we've talked about the different ways of viewing order flow shifts, I want to show you how to actually apply this to the charts. So now we are looking at NASDAQ, and what you can see here is we have a weekly bullish fair value gap. So we have a context from internal to external on the weekly time frame on NQ. If you guys haven't seen my video on IRL and ERL, I'll drop the video right up here and you guys can go click that and watch that. I talk all about internal and external and how to get very clear draws on liquidity from price. So because we have a bullish draw on liquidity on the weekly from internal to external, we want to refer to our time frame alignment. And because this is a weekly time frame, we're going to drop into the 4-hour and look for the 4-hour to shift order flow after it has stung into this weekly fair value gap. So now, as you can see, order flow is clearly bullish and has shifted, into a buy program, into bullish order flow. So let's look at the different ways of viewing this order flow shift. So first we have the ST down here. It occurs before the change in state of delivery and before the market structure shift. It's the fair value gap in and the fair value gap out of that weekly PD array. So this is our first way of viewing the order flow shift. If that is what you prefer to do, then do that. That is personally my preference. I just wait for fair value gaps out of the PD arrays to know that order flow is shifting. Next, we have the change in state of delivery. It is the series of down close candles that occurs here. And once price creates a body close above the opening price of this series of down close candles, then we know that this change in state of delivery has occurred. Finally, we have this swing point right here. This is our market structure shift, and this is where price shifts the trend. It's where price shifts structure and now is telling us that order flow is bullish. So now that this 4-hour order flow is in alignment, we should continue to respect bullish discount arrays and head higher towards this weekly buy side liquidity. Now let's fast forward a little bit and I'll show you guys the trade that I took actually today. So right here we have a bullish 4-hour fair value gap. We still haven't swept that weekly high. We haven't took that weekly context that we have. So our bias on price remains bullish in this 4-hour market maker buy model. And what you'll see is because this is a 4-hour fair value gap, a 4-hour PD array, we want to drop into our 15-minute to see the market maker model that forms. So again, just referring to time frame alignment, all we're doing is dropping into the 15-minute to see price change, state of delivery, ST, market structure shift, whichever one you prefer. We're just looking for price to shift order flow. So now let's talk about the different ways of viewing this order flow shift on the 15-minute. I have them all marked out right here. This is the ST. So first we have the ST, this fair value gap out of the 4-hour PD array. Once price has created a fair value gap out of the higher time frame PD array, we can say, okay, price is now shifting order flow and heading higher. Next, we have the change in state of delivery. We're taking the opening price from this series of down close candles, and then price creates this fair value gap out and has a body close above that opening price, validating this order block, aka this change in state of delivery. The final way is just looking at this swing point right here. This is the market structure shift, where price shifts in trend and heads higher. Either way, all of these work. They're all just different ways of viewing the same thing. I personally just use the fair value gaps. I think all you need is fair value gaps. They're super, super simple. Fair value gaps and liquidity is literally all I use, and it's all I need to see price showing intention, showing that it's shifting, showing that it's respecting everything, right? Fair value gaps and liquidity is all I need. It's all I use. And to me, it's the simplest way of doing this. And then, yeah, I set my stop loss below that protected low. I target 2R within that context that I've created on the higher time frame, and I just let, price do its thing. I let the numbers play out. It either stops me out or it hits my target. We took this long live on stream, so if you guys haven't subscribed to my channel, make sure you go down below and subscribe. I drop so much knowledge, so much value on this channel. I do almost daily live streams, and I also do weekly forecasts every single Sunday. So if you're new, definitely go down below and subscribe. Now, before we wrap up this video, I just want to drop you guys a quick little checklist on how to use order flow shifts. Basically, we're just waiting for price to trade into a higher time frame PD array. Price is fractal, so that higher time frame PD array can be on any time frame. Once we've traded into the higher time frame PD array, you want to drop into the time frame aligned time frame. So if you're on the 4-hour, drop into the 15-minute. If you're on the daily, drop into the 1-hour, etc., etc. Next, you want to look for a shift in order flow, whether that be using a change in state of delivery, a market structure shift, or an ST. Whichever one you prefer is what you should look for, and you're just waiting for order flow to shift. Then you can trade any stage of the market maker model until that higher time frame context is taken. If you guys want to learn about MMXM and how I am consistently profiting from these markets with MMXM, definitely go check out this video right here where I dive deep into the exact trading plan that made me consistently profitable. Market structure shift, change in state of delivery, ST, they're all just different ways of viewing order flow shifting. So pick the one that resonates with you, that sticks out to you in the charts, and go with that. There's no need to overcomplicate it. I personally just use fair value gaps because a high probability market structure shift creates a fair value gap. A high probability change in state of delivery creates a fair value gap, and Ario's ST creates fair value gaps. So to me, all I need to look for is a fair value gap out of the higher time frame PD array to confirm that order flow is shifting. Keep your trading simple. All I use is a gray box and a gray line. And definitely go down below and join my free Discord where I call these moves every single day. I show you guys what your eyes should be on and what my eyes are personally on and what I'm watching for every week. And yeah, I just drop a ton of value and knowledge in there. So it's literally a no-brainer that you should go down below and join the Discord. One last thing, I am offering one-on-one sessions where I reverse engineer all of your issues. We basically sit down, do mentoring, we look at your data, we look at your trades, and we figure out what is preventing you from being consistently profitable. What is holding you back? And then we reverse engineer those issues. I show you everything that I do, exactly how I trade, and I give you all my knowledge, and we bridge that gap. So if you guys want to book a one-on-one session with me, I'll leave a link right down below at the top of the description. With that being said, that's really it for this video. I hope that you guys did enjoy and found it insightful. If you did, all I ask is that you go down below, interact with the video, leave a like, comment, share it with your friend, and if you're new, subscribe. All that good stuff. It really helps the content get pushed out by the algorithm, and that's literally all I ask. I give out all this knowledge completely free, so that's all I ask. If you could please just go down below and interact with the video and do all that, that would be amazing. But yeah, that's really it for this video. I hope you guys did enjoy. I'm out.